It is Hero Motocorp, and from the looks of it, it's been a decent set of numbers. The profit has come in at 976 crore rupees. We were working with an ET now estimate of 928 crores. Top line growth as well has been strong at 9,091 crores, while we had an ET now expectations of about 9,003 crore rupees. More importantly, the operational performance has been in line with street estimates. So 1,380 crores what the ET now poll suggested. We have got a number of 1,378 crores, bang in line, and the margins at 15.2%. But remember, the input cost pressures have definitely driven the margins lower this time around, which is why we were expecting moderate sales growth in the quarter, and that is what exactly they have delivered. So I think it's an inline set of numbers. That's how we can categorize Hero Motocorp's earnings. Remember, throughout the trading day today, it was a very choppy session. We didn't really see any sort of a decisive trend for the stock. It managed to gain about 0.5% by the time we shut shop. But that's the number for you. Let's get in Bibhishan Jagtap, who now joins in to analyze the numbers for us. We weren't going in with very high expectations, and it seems like they've delivered pretty much in line. Revenues at 9,091 crores, margins at 15.2%. How are you reading into these two montrables?
So yeah, I think broadly the numbers are pretty much in line with our consensus estimates. We were anticipating about 9,110 crores. Company has reported about 9,091 crores. There has been a lot of concern regarding how the realization would pan out. But overall, I think looking at the revenue, I think numbers are pretty much in line with our estimates. Even the margins are also, pretty much in line with our estimates. So we were anticipating about 15.3%, whereas company has reported about 15.2%. There is an increase in the other income. So I think we were anticipating about 110 crores versus company has reported about 223 crores of other income, which led to have a, very decent performance on the line.
Okay. More importantly, I believe the volume growth has come in at about 5.5%, if I'm not mistaken. They are saying that they sold more than 2 million units for the third consecutive quarter, and they will carry on this momentum through the rest of the year. How is it that you're reading into these comments, and what is it that you would like to hear out from the management?
So overall for the year FY19, we were anticipating about 10.5% of the volume growth, which is about 8.2 million. Overall, if you look at the numbers on YTD basis, we were anticipating about, on a YTD basis, the numbers are at least 4.2 million. So it is pretty much in line with what we are anticipating even for FY19. There has been some confusion regarding the insurance cover. But I think that particular issue has been very clearly sorted out, and I think we expect that it should be good, in coming time. As far as management commentary is concerned, I think yes, we really like to know, how the insurance transition has been over the month. That is number one, and overall, what is their sense on overall festive season broadly. But I believe it should be on positive side.
Okay, let's also get in Karunya, my research analyst, who now joins in to break down the numbers for us. Karunya.
Well, looking at the headline numbers, they're largely in line. Profits have come a tad above what we had estimated. Revenues also a slight improvement than what the ET Now poll was suggesting. Let me just tell you the numbers. Profits are higher, rather down 3.4%, coming in at 976 crore rupees. Revenues have come in at 9,091. We were expecting 9,000 crore. So a slight, beat on the revenue front as well. But EBITDA is something, and margins is something that has been in line. We were expecting a degrowth and margins to come in at 15.2%, and that's exactly what the company has delivered. Clearly, the raw material prices have played the devil this time around. They have weighed on the margins performance for the company. Apart from that, do remember that the Haridwar plant benefits are not there anymore for Hero Motor, so that also something that has weighed in on the numbers. Now, apart from that, what one needs to understand from the management commentary is, of course, across. What will be the demand outlook? How is it looking going forward? Has there been any uptick in the festive season? Has there been any change in the rural trend as well? That's something to watch out for. And last time the management after the result con call had mentioned that scooters is something that they have been lagging behind in, and they will be upping their game in that domain. That is something would be encouraging to get some commentary on that front as well as to what their game plan is going forward, not just for scooters alone but for motorcycles as well.
Okay, thanks for that, Karunya. In fact, just reading from Pawan Munjal's statement, the chairman of the company, he's saying that with the upcoming festive season, the Xtreme 200R is going to help consolidate their market leadership. The global economy has been firm. India continues to fascinate the world. They have created sturdy financial structures, seeing robust demand for their iconic brands and consistently reporting sequential growth quarter after quarter. They are confident that they will carry forward the momentum through the rest of the year and navigate through the cost challenges to deliver profitable and sustained growth. Abhishek Jain, senior analyst auto at HDFC Securities, is with us as well. And Abhishek, clearly the spoil sport this time around has been the higher raw material costs, but despite that, it's been a fairly inline set of earnings, given that we were not going in with very high expectations in the first place. How are you reading into the 5.5% volume growth and the other details come in?
So numbers are broadly in line with our estimates. However, on margin front, there was a slight weakness. We were expecting around 15.4%. Now it is around 15.2%, but it is a decent number. However, PAT was above our estimates because of the higher than expected other income. So, despite all headwinds the company faced in the last quarter, like aggressive pricing strategy of Bajaj Auto and currency depreciation, commodity inflation, and increase in the third-party insurance, and there was some impact also of West Bengal two-wheeler sales because of the mandatory two-wheeler mandatory license requirement. So, despite all these headwinds, the company reported 6% growth in the volume, and plus they have also increased shown an increase in net ASP by 2%. So, PAT growth is in line with our estimates.
All right. What is it that you would like to hear from the management commentary? Because there is, anticipation of new product launches, the demand trends as well in the urban and rural markets. What is the key management commentary that you would anticipate?
So basically, everybody is awaiting about its launch in the two-wheeler segment in 125cc scooters. And if the company launch it before the festive season, like in Diwali or Dhanteras, that will be a big positive for the stocks, and I think that that will accelerate the overall volume growth. Plus, what is their strategy to gain the market share in, especially in the premium segment? So these two things are quite important in their commentary. One more thing, that is, as the Bajaj Auto is continuously showing an aggressive pricing strategy. So how the Hero Motocorp will take it, as they have lost around 150 bips market share in economy segment. However, their growth in economy segment is quite strong, that is 15.5% during this quarter. So how they take it, and these are the important factors.
Thanks much, gentlemen, for joining in and giving us a heads up on the numbers. In-line set of earnings in terms of the margins, profit and revenue has beat the street, and volume growth has come in at 5.5%, with management saying they're confident of the trends going forward. We'll have to wait and watch how the stock price of Hero Motor reacts tomorrow.